Hi, this is Brent with Trade Therapy. Welcome to the Trading Couch. We were talking about Eli Lilly for the first time since November, since the last time we took a look at the healthcare industry. This is what it looked like then. We saw it losing its main support line right here with some very small-bodied, high-volume candles. That's always a sign of institutional behavior. And in this case, considering that Eli Lilly has gone on this massive impulsive run right here, it's not surprising to see Wall Street taking some profit. We used the Ichimoku cloud to identify some levels that we thought might be tested. Whenever you see flat levels within the cloud, that's usually where price is going to be attracted to take out stop losses, because that represents support. And there's usually some liquidity between market structure and certain levels of support. We did take a look at a close-in view, and you can see that high volume, lower, smaller bodied candles developing here. We see the flat levels that we thought might get tested at beginning at 740, but then dipping just below that, down below 700 into the 690s, and then 710s is the area we thought would be the most likely to get some sort of a test in the event that we saw continued weakness to develop. And that's exactly what we did see. Not surprising when you look at this massive impulsive structure and this massive run that Eli Lilly has been on. It makes sense that Wall Street will be taking profit, institutional level volume coming in, taking advantage of the pullback here to take profits, but at the same time, potentially reloading their position. There is a pivot right here that it came back to, which is coinciding with the 200-week exponential moving average. Not uncommon to see profit taking happen at such a high Fibonacci extension of 2618. Very impressive. It's too early to tell whether or not we're going to see a larger accumulation structure develop right here. So far, all we've really got is this ABC corrective wave down here where profit was taken at the high extension levels and the all-time resistance. Short trades were entered into, and now short profits being taken right here. We'll see what happens. We'll see if volume steps in to support price to get it through the now falling exponential moving averages right here. We'll see if Wall Street's ready to move price back up and continue the uptrend. We do think wave 5 is looming out there. There is bullish divergence developed on the short time frame. So we'll see what happens as it gets up and it starts testing the bottom side of this volume profile to see if Wall Street has reloaded or if they need more time and want to build larger positions. If you like this level of detail, you should read Clarity. We teach people how to read the institutional cycle. Here's a tip. If you don't know where Wall Street's positioned or what you're holding, you're positioned against them. Read Clarity for a couple of months. You'll pick it right up. You can cancel it anytime. There'll be a coupon up here in a second. That's all the time we've got for Eli Lilly this week. We'll see you next week.